Hello everyone, welcome back to Accounting with Oscar. Welcome back to my YouTube channel. It's been a while since we've done an upload. Now, I believe most of you who have been watching my videos, you've already set for your May-June 25 paper, right? So that's what we're here to do today. Today, we're going to look into another past year right out of the oven. This is the 2025 May-June Accounting Paper 2. Yes, you heard it here first. This is the May-June 2025 Accounting Paper 2. This is variant 2 of the paper, very new paper, right? So this was about 2 or 3 months ago. Now, I hope those of you who sat for this paper, you've done well, right? I hope it was as easy for you as it is for me. Now, overall, this paper, I will rank it probably at, a level 2 difficulty out of 5. It's not a very tough paper, in fact, right? If you have been practicing on enough past years, you see there's a trend, right? The questions are always similar. They are somewhat similar. The only thing is they twist the scenarios a little bit. They tweak a bit here and there, but overall, it's the same paper, right? If you've done enough past years, you should ace this. So what we're going to do today is we're going to be going through the entire May-June 25 Paper 2 Variant 2. I'm going to be guiding you on how we're going to answer this paper, as well as how we're going to identify answers, right? So I'm going to start you off easy. We're going to look at question 1. Now, if you've been following the past years very closely, you know that paper 1 is always going to be something related to double entry, something related to perhaps control accounts or even books of prime entries, right? Your journals. So most of the time you see a cash book, which is what we have right here, or sometimes you see a petty cash book, and on rare occasions you'll get perhaps a sales journal, purchases journal, or even the returns journal. Right, but we're going to look into a cash book question here. This is what question 1 is all about. So question 1, we are going to prepare a cash book, right? Very straightforward. So let me run you through our transactions here. Kadima is a trader. He sells on credit only. During March 2025, the following transactions took place. Now, on the 4th of March, we paid Lee $196 by bank transfer in full settlement of an invoice for $200. Now, if you're familiar with cash book, you know what we have to do, right? We have to work out the discounts. Yes, those of you who said discounts, you're correct. I throw you a virtual chocolate, but yeah, I don't know how I'm gonna do that. Okay, virtual chocolate for you. Right, so 196, that was what we paid. This went out of our bank. This is to settle an invoice for $200. You paid $196 to settle an invoice of $200. That means there was a $4 discount. Am I right? Well, I've got to be right. Okay, so $4 discount there. Now, on the 6th of March, we received payment by check 291 from Sophia, who had deducted a 3% cash discount. There you go again. So 291 is the amount that we received. This is what went into our bank. This was after deducting a 3% cash discount. Now, that means to say the $291 here actually represents 97%. Do you agree? The $291 here represents 97% because they've deducted a 3% cash discount. So we're going to take the figure that we get here, multiply by 3, right? So your discount was $9. Do you agree with me? So you just have to be careful on certain occasions like this. That's where they trick you. Well, if you're good enough, you don't fall into their trap. On the 14th, you paid motor expenses, $26 by cash. Straightforward. On the 19th, you receive payment via bank transfer, $375 from Murph, a customer. So no discounts there. You don't have to do any adjustments. 22nd, you paid Mark $240 by online transfer, having deducted a 4% cash discount. So what does that mean? You paid $240, that was the actual that went out of your bank, after you deducted a 4% cash discount. So it's the same scenario as March 6. The $240 that you paid represents 96% of the total amount. Do you agree? So once you find that figure, you're going to multiply by 4, right? 4% to calculate a $10 discount. On the 28th, you withdrew $400 cash from the bank for business use, right? For business use. Now, if they mention that this was for personal use, you're going to park it into drawings. But since they mentioned it's for business use, this represents a contra entry. So you're taking money out of the bank and you're putting it into cash in hand. Yeah, what was the cash for? Okay, so you have transaction on the 29th. We paid wages, $362 in cash. So that was the withdrawal. Right, then on the 30th, last day, we paid motor expenses, $91 by check. So other than working out the discounts, right, I believe the question here is very straightforward. You should be able to score full marks or at least a 90% for the first question. So let's tweak this page a little bit because I can't write in a 90 degrees position. Right, so we're going to bring up all the information here into our cash book now. Notice they didn't mention anything about the opening balances, right? Now, that's because the opening balances have been given to you. So we don't need to transfer anything there. We just have to park all the information in. So, 2025, March 4th. Paid $196 to Lee. So I'm going to put my transaction here, March 4th. We paid Lee $196 by bank transfer in settlement of an invoice for $200. Now, at this point, you should be very familiar with the cash book. Cash book represents what? Your cash book represents your cash and bank balances. Now, cash and bank, generally they are considered assets of the business. So A equals to C plus L. A is on the left-hand side. So A, asset, is on the debit. Debit represents an increase in asset. Credit represents a reduction in asset, right? So you should be very familiar with that at this point. So we have our second transaction here. Receive payment from Sophia, 291 by check. So March 6, Sophia, 291. There was a $9 discount which we worked out here. So we're gonna park that in. So they're very nice. They highlighted specifically which is discount allowed, which is discount received. Now sometimes they don't do that, so you just have to work it out on your own. Next transaction, paying motor expenses, 26 by cash. So we're gonna park it here on the 14th. We paid for motor expenses by cash, 26. Be careful, make sure you park it into the right column. March 19, receive payment from Murph by bank transfer. So 19, we have Murph here, 375 by bank transfer. 22nd, you paid Mark 240 with a $10 discount. So 22nd, you paid Mark 240, $10 discount. 28, there's your contra entry. So you just gotta be a bit careful with contra entries. Do remember they will appear on both sides of your cash book, one on the debit, one on the credit. So you took out $400 cash. So on the 28th, you took out $400 cash from the bank. Now this is gonna be parked into the cash account on the debit side. So you withdrew money from the bank. Bank reduces, cash increases. That's your contra entry right there. 29, you paid $362 of wages in cash. And finally, on the 30th, you paid $91 motor expenses by check. Right, so that's all our transactions from the above. So once we park everything in, you just have to compute your closing balances. That's it, with plenty of space left. So I'm just gonna leave out some lines in between to work out my closing balances. So let's total up the discounts column first, because we don't need to work out any balances for that. Do keep in mind. Now let's work out for cash. If you look at cash, definitely the debit side is larger, so we're gonna put in $450 on the debit side. I'm gonna use a different color just for the closing balances. So March 31st, make sure you get the dates right. They're gonna minus a mark if you don't get the dates right. So $450, you're gonna minus 26 and 362. So once you work that out, you should be getting a $62 balance carried down. Now onwards with the bank. If you look at the bank, I believe the debit side is larger, right? So you have a total of 1,506 here, right? Grab your handy dandy calculator and try to work out the balance. So you minus 196, minus 240, minus 400, minus 91. So you're gonna get 579 as your balance carried down. Now don't close it so soon. Don't flip to the next question. You have one more thing to do, which is to get the balance brought down. Remember, you always have to transfer your balance carry down, right? Otherwise, your examiner, your marker is gonna deduct a mark from you. So remember always to finish up with the balance brought down. And there you go. You should be easily getting your 12 marks from this cash book. It's very straightforward, nothing too complicated there, other than perhaps getting stuck with the discounts. But if you do enough questions, you should not have an issue. Alright, your 12 marks should be very easily secured. Now let's move on to the next part of question 1, something that I believe most candidates did not expect. A bank reconciliation question. Yes, I believe nobody really expected a bank reconciliation to come out in paper 2. Well, my students always overlook it. Yeah, very commonly overlooked. Bank reconciliation, incomplete records, right? Really, very easily overlooked. So, now this bank reconciliation question here is a little bit tricky. It is a bit tricky. Some of you might get it wrong. I believe quite a number got it wrong. It's a tricky question, so let's dive into it. So Karima, right here, she received a bank statement dated 31st March 2025. The bank statement shows that number 1, the check for motor expenses had not yet been presented to the bank. Now, what are they talking about? This is the transaction on the 30th. You paid motor expenses $91 by check. So at the end of the month, this check was not cleared, right? It was not cleared by the bank. Now, transaction 2. The amount received from Murph was $357. Kadima checked his records and found that the amount on the bank statement is the correct amount. Right, so let's have a look at Murph. What happened to Murph? Murph, right here, okay, on the 19th. So in our cash book, we recorded a receipt of $375. This was what we recorded. Now, the bank statement came and the figure was actually $357. So that means we made an error. Now, bonus points for whoever tells me what error is this. Come, correction of errors. What type of error happened here? It's supposed to be 357. You put it as 375. What do you call that? That's an error of transposition, right? You've transferred the positions of the digits. Okay, bonus points to whoever got it right. I'll throw you another virtual Kit Kat. Can I say Kit Kat or is that a copyright? Am I gonna get banned? Well, anyways, I'm not gonna be demonetized. I don't even earn anything from YouTube. I have too little views. It's just a passion thing. So, 375 was supposed to be 357. Okay, so 375 is what we've recorded. This is wrong. The actual is 357. Now, how much of a difference is that? So take your calculator, minus out. You should be getting an $18 difference. So we over-recorded the bank balance by 18. Okay, Now, that's sorted out. Calculate the amount for the bank balance which Karima would show in his statement of financial position at 31st March. Now, here's where you're gonna start getting a headache. Which figure do you put in the statement of financial position? Do you put in the bank statement balance or do you put in the cash book balance? Which figure do you put in, the bank statement or the cash book? Should you follow the bank statement or should you follow your cash book? So, drum roll. The answer should be your cash book, right? Now, we don't follow the bank statement balance because there are clearing periods in the bank system. Remember, sometimes the bank doesn't clear a payment straight away. There's a clearing period of up to 3 days. So most of the time, a payment which has already gone out, like number 1 for example, may not have been cleared by the bank. But in reality, has the payment gone out? Yes, right? We have issued a check. So from the accountant's or from the bookkeeper's point of view, we need to account for this check. So that being said, there will be no adjustment required for the first transaction. So the balance as per cash book, we calculated our bank balance to be 579. So I'm going to plug that in here. In fact, there's no bank statement balance given. So we're not going to start with the bank statement at all. We're going to start with the balance as per cash book. Now, we're going to end with the balance per adjusted or the balance per revised cash book because you don't take the bank statement balance into the financial position. Remember that, right? So there's no adjustment for transaction 1. Any check that has not been presented, we just wait, right? You just wait for a couple of days until the bank clears the check. That's it. You don't need to do anything. There's no error. There's nothing wrong on your side. It's just a timing difference. So the only thing I need to correct here is transaction 2. So I'm going to put that as a cash book error or a transposition error if you wish. So that's going to be 375 minus 357. So we're going to take away an $18 from the cash book because you over recorded. Now take your calculator and work out the adjusted cash book balance. Yeah, even without a calculator, you should get this. So the balance as per revised cash book is going to be $561. Now that is your financial position balance, 561. So we're going to leave that as the final answer, 561. Now, if you get this, you get this. If you don't, you lose your 3 marks. It's a slightly tougher question, so I believe some of you may lose marks here. Right, let's bring you on to the last part of question 1, a 5-marker question here. So part C will always be a theoretical element, theoretical questions. If you've done enough questions here, you would know this. So Karima is considering to stop using cash and checks in his business. Okay, what does that mean? all payments would be made directly from the bank account, and all customers would be required to pay by bank transfer. So you're going to stop using cash and you're going to stop issuing checks. You're going to do everything via bank transfer, right? So shifting into the modern era here. He would allow cash discount of 5% for all payments received within 30 days of the invoice. So that's your second change. The first, you're going to stop using cash and checks. You're going to start moving into the modern era, everything by bank transfer. And number two, you're going to encourage early payment by giving a 5% cash discount. Alright, so two changes right here. And the requirements are simple. Advise Kadima whether or not he should make the above changes. Right? So should you or should you not? Justify your answers by providing points for and against making these changes. Now, the answers should come to you automatically, right? Even if you're not a business owner, even if you're not an entrepreneur, you should be able to answer this question using a little bit of logic and a little bit of common sense. Now, I'm not going to give you a full answer. I'm going to give you in point form so you can work out how you want to phrase your answers. You can you can work it out, okay, right? So I'm going to give you in point form. You can phrase out the answers yourself. You can see how you want to construct your sentences. So let's talk about for, right? What happens when you stop using cash and checks? We're going to go through it one by one, right? Once you stop using cash, what happens? So you don't run on cash anymore, you don't collect cash. What's a good thing about that? Now, using a bit of logic, using a bit of common sense, you should be able to tell me that you're gonna reduce the risk of cash being stolen. Is that correct? When you deal with cash, there's always a risk that your cash may be stolen. It's very easy for people to commit a fraud using cash, right? I can receive a payment, but I just assume I did not receive it, so I don't knock off the payment, right? I don't make any adjustments to the receivables. I take the cash and I just, flat away with it. So that's one of the good things here, right? So for right, stopping cash and checks. So number one, we can reduce the risk of fraud, right? Reduce the risk of fraud, or some of you might call this misappropriation of cash. So that's one of your first points, right? Now, what else can you think of when you stop using cash or checks? So using a little bit of common sense here, you should be able to tell me that we can increase our profits when we stop using cash and checks. Now, how does that work? You increase profits via the reduction of check processing fees. You see, in certain countries or in most countries, the banks, they will charge you a certain amount of fees or service charges to process or to clear the checks that you issue. So when you stop issuing checks, you can save up on all these check processing fees, which will increase your profits and your cash flow, your liquidity. Now, what else can you tell me here? If I stop using cash and checks, what's going to happen? I can reduce trips to the bank. Am I right? So you don't carry cash with you anymore. You don't need to keep going to the bank to deposit the money. You don't have to keep making trips to the bank to deposit your check. So everything is done via a bank transfer. You don't have to go to the bank to deposit or to withdraw, right? So you save a lot of time there. Okay, now what else can you tell me? When you stop using cash and checks, do you have any more points? So we can eliminate the time required for payments to clear, right? Because once you shift to a bank transfer, payments will come in at real time. So you don't have to wait like 3 working days for the money to clear into your bank account. Everything comes in at real time. So you eliminate, all right, the waiting period. Okay, what else? What else can you think of? You can avoid the issue of checks being returned, right? Because when we issue checks, there may be cases of dishonored check, right? Checks may be rejected by the bank for various reasons, maybe a wrong signature, or the amount in words and numbers don't tally, or maybe it's due to wrong dates. So once you start shifting to bank transfers, you can avoid all that, right? You avoid the risks of having a dishonored check. Okay, I think we have more than enough points for the first issue. Now, allowing a cash discount of 5%, what can you talk about? So you reduce, right? Reduces the risk of irrecoverable debts. Right? That should be very straightforward. So once I offer a cash discount, customers are going to pay quicker. So that will reduce irrecoverable debts. And in fact, it may help. Okay, it may help to strengthen the liquidity position of the business, right? May strengthen the liquidity position. Why? Because we are collecting payments faster, right? You're collecting your payments faster. Instead of letting your receivables hang on for like 2 months or 3 months, we get the payment in within the first month. So your liquidity is going to be much better. Okay, now that's way more than enough points for making the changes, right? So it should be very easy, right? It should come into you very straightforward. Now, we have to give them points for and against making these changes. So you can't just talk about the good, you have to talk a little bit about the bad. So what happens if you stop using cash and checks, right? You ask your customers to pay by bank transfer. What's the bet that can arise here? So I'm gonna start with the first one, which is something very logical. I'm gonna say that not all customers use bank transfer. Right. I know it's the modern era, right? But not everybody uses bank transfer. Some businesses, especially those who are dealing with large amounts in the millions or hundreds of thousands, they would still prefer using checks as a form of more secure payment. So, not everybody uses bank transfer. That's one thing you have to consider. And number two, not all suppliers or employees prefer bank transfer, right? Some of your suppliers or some of your employees, they may prefer being paid in cash. So not everybody likes bank transfer. Some people, they like receiving cash. Maybe they need cash for some grocery purchase or something. Your employees, you never know, right? So some people, they may prefer cash. They would not really be in favor of receiving money via bank transfer. Right. What else can you talk about? I mean, let's look at the 5% cash discount. What can you say here? It's going to reduce our profits. Yeah, profit reduces due to the 5% cash discount implemented or given. So once you start giving out discounts, your profit is going to fall. Okay, I've reached the last line here, so I think I'll stop there for my answer. So if you can apply a little bit of common sense, a little bit of logic, you should be able to get at least 4 out of 5 marks, right? 3 is minimal, that's average. You should be able to get 4, right? With very solid points. So with that, we conclude question 1 of the May-June 25 paper. So leave a comment down below if you have any questions or you have any other answers you wish to share. I thank you all for supporting this YouTube channel. I think we've grown quite a bit since our last few uploads. Thank you to each and every one of you who've subscribed, who have been viewing my videos. I hope I've helped you in some way or another. So I'm going to see you in the next video where we're going to discuss question 2, which is a partnership question. So I'll see you there.